So in this market environment, it's been very choppy, very flat, and very hard to day trade. I believe personally that's just the way it's been going. If you take a look at any chart, you will see that for the most part the S&P, the big stocks like Apple, which I'll just show for a moment here to hammer home the point. You take a stock like Apple, which is the largest stock in the market, and you can see since March Apple has been just channeling, no new direction to the upside or to the downside. So it's been hard to own premium and, really get momentum. So what I think people do naturally is they start becoming more aggressive. They become more aggressive in a market like this because someone like me, where I'm usually able to capture 20% gains, now there's only 5 to 10% gains to be captured consistently, at least from what I'm seeing. And what people do when opportunities become scarce is they increase their principals to capture the same dollar gains that larger percentage gains would otherwise translate to. For example, I just said I usually put in $500 and I look to play setups where I'm confident I can make around 20% in gains. That would translate to profits of $100. In this environment, though, I'm barely confident in 10% gains showing up consistently, let alone 20% gains. So in order to make my same $100 in profit, I would have to put in $1,000 and try and make my 10% and then get $100 in profit. So what I'm doing in that case is I'm doubling my principal from 500 to 1,000, which doubles my risk, but my reward is staying the exact same because I'm not looking for 20% anymore. I'm only looking for 10% because that's what this market's giving out in my place. And that's just stupid to me, but it's what most people do. People compensate higher risk in lower reward environments when really it should be the exact opposite. Because if you assume that you're still going to be stopping out at, say, 5 to 10%, I just use 5% for the purpose of this example, you can see that, on my $500 principal, if I lose 5%, I'm losing $25. But on my $1,000 principal that I increased because I'm trying to make that same $100 profit, I lose 5%. Now I'm losing $50. So my risk has just jumped. My loss has doubled, but my profit has stayed the same. If I'm only looking for 5% gains, now I need to quadruple my original $500. I need to double the $1,000. I need to put in $2,000 to make 5% and still make $100. And if I'm taking that same 5% loss, I'm losing $100. So, tripling my losses. And this is what people do. This is what I used to do because it's natural. You think, okay, I can't make the same amount of money that I was making over the last month. I can't make the same amount of percentages that I was making over the last month, so I need to compensate for that by putting in more money and making less percentages, just like you see in this simple theoretical example. But what ends up happening is because the environment's so bad, your winning percentage goes down and you end up losing. And it adds up and you lose a lot of money and you just shoot yourself in the foot. So what I recommend and what I've been doing myself is I've been keeping my principals consistent around this $500 area, and instead of just looking for 20%, I've only looked for 10%. So I'm making less, and it is what it is. You go through periods where you're not going to have as much success because at the end of the day, the market determines what type of opportunities we have, and it's up to you to determine how you want to trade those opportunities. So I know it's tempting to be more aggressive in order to compensate for the fewer opportunities you're getting, but guys, that is the wrong thing to do. It is the wrong thing to do. You need to be less aggressive. You need to become much more conservative in this environment. Otherwise, you're going to kill yourself, and sometimes it's about surviving, not thriving. This is a terrible environment. It will get better, and you don't want to be playing from behind when it does get better. You want to be, having consolidated your gains or added a small amount, and now you're in position that when things pick up, now you can be aggressive. Now you're really going to extend yourself. But you don't want to be one of those guys that's, come July, come August, when maybe things are picking up, you're battling back from a $5,000 hole that you created for yourself in June.